Thanks, Keshni. I can't say that I agree that I'm an expert, but yeah, happy to kind of share as much info as I have, and guess just kind of give the context of myself and the learnings that I'm going to be sharing with you today is just, like I said, I'm a venture capital investment professional right now, and I work for a company called Newtown Partners. And just to give you the context of Newtown Partners, so we're a US VC fund manager that's based in San Diego as well as in Cape Town. It was started by our two GPs who are both successful entrepreneurs, Vinnie Lingham and Luke Clausen, who've had multiple exits and then transitioned into angel investing and then formalized it in a VC fund structure. Just for a quick overview of our mandate, we typically invest into the healthcare, logistics, supply chain, and blockchain technology sectors. We prefer B2B technology-led or enabled businesses. From a geographic focus, we invest globally, but with a preference for Africa because most of our team is based in Africa. And from a stage perspective, we're looking at typically Series C and Series A transactions where businesses have around $50,000 of recurring revenue on a monthly basis. And we're investing between $500,000 and $2 million. But with that said, I've probably looked at close to 1,000 different startups in terms of funding applications. And what I'd like to share today, at least, is just, I haven't been an entrepreneur myself, so I can't say that I've felt the pain of going through this process on the other side. But if I was an entrepreneur and if I was looking for funding in South Africa, I'll focus on South Africa as the context. This is kind of the way I'd approach it. So yeah, let's get into it. I think through the discussion, what I'd like to just touch on is just a couple points. Firstly, the startup lifecycle, which is kind of generally known, and why that's important is just so that, if you're as a startup or looking to raise funding, it's very important to understand where you are in your growth lifecycle so that you can identify who you should be chatting to, what types of capital are available, and what the expectations are as a founder trying to raise capital. I think then we'll move and try and make it specific to the South African ecosystem, because I think the topic is raising funds in South Africa, but I think it's pretty applicable to businesses in the rest of Africa. And then once we understand the ecosystem, it would be good just to share some considerations that I think everyone should consider before they approach a funder. And most importantly, the concept of being investor ready. And then, finally, just touch on some key pitfalls that we've seen or I've seen founders make when they're trying to raise funding in South Africa. I think just to emphasize that I'll approach it from a kind of venture capital perspective, and that's mostly tech-enabled businesses. And that may mean that it's not 100% applicable to every type of business in South Africa, but I'll hopefully try and make it a bit more relevant. Cool. So just to kick off, I think the graph above just depicts what's kind of generally acceptable as a typical life cycle for an early stage business all the way until they potentially IPO. So, the x-axis is showing kind of stage of growth and maturity, and the y-axis is showing effectively level of revenue. And the kind of squiggly black line is just showing kind of profitability, which is effectively and how fast that business is growing. And then you'll see the bubbles just showing where there are different types of funders or funder characteristics that participate at different parts of the growth stage of a startup. I'm sure everyone on this call is pretty au fait with this diagram and this kind of characteristics. But I think what's the key concept here is that at each stage of a business's life cycle, there's obviously different levels of risk, moving from highest risk at initial concept all the way to pretty lower risk on the IPO side on the right-hand side. But what's important is that there's different funders participating in each kind of stage, and each funder has then their own requirements based on their stage of business. But as a founder, I would say what's most important is just understand where you sit in this life cycle so that you know the right person to approach when you're raising capital. And let's try and make this a bit more specific to the South African ecosystem or landscape, because that graphic is probably globally relevant, but not necessarily South African relevant. So this graph here just shows kind of a high-level research done by Ndsa around the South African funding ecosystem. I think it was in 2015. But what it kind of depicts is just that there are multiple different providers. Firstly, there are direct finance providers on the top side, and then there's capacity development providers, which are on the bottom side. And I think why that's important to highlight is that when you're raising funds as a South African startup or trying to scale, you should not only consider that direct finance options, and you should look at the capacity builders and providers that are available to you, because that should help you grow your business. We'll touch on some of the businesses that are in each life cycle, but I think the most important thing to note in this graphic is that you'll see, at the ideation stage, or really early stage of a business, in South Africa, there is a big funding gap for those businesses. We are typically more risk averse as a South African funding ecosystem, and that's due to a couple reasons, but mostly the capital that's available to capital providers in the ecosystem are very risk averse. So generally, that means funders who are investing in startups have a certain risk tolerance, which is a lot lower than globally accepted kind of norms. And additionally, there is a very little amount of capital available in South Africa if you compare it to the global norm. I mean, I think year to date in South Africa, tech startups have raised around $750 million, whereas globally, I think the number is closer to $400 billion. So, 0.2% of the capital raised by South African startups versus globally just shows that there's a massive gap. And I think that's to do a lot with the maturity of the ecosystem and also the availability of capital. But why this is important to note is just that the concept of raising funding in South Africa, and Africa for that reason, is very difficult. So I don't envy any South African business or SME that is trying to raise capital in this market. It is very, very, very difficult. And you're not alone if you struggle to raise capital. But maybe just to kind of double click onto those different sectors and kind of the different pools of capital that are generally available at those stages. If we look at ideation or startup, typically where you would get some money to get your business off the ground, have a bit of MVP or minimal viable product to kind of test whether your customer is willing to pay for this, is, I would say, firstly, family and friends. Probably in South Africa, that's not, most of the population isn't privileged enough to have a group of family or friends that have capital that can put into your business, but it may be possible. There's some crowdfunding opportunities. There's a lot of government institutions that have capital dedicated to supporting early stage businesses. Most importantly, there's incubators and ecosystem builders who are responsible for supporting and growing entrepreneurship in South Africa. And then there's other means of like corporate competitions, startup competitions that can give you grant funding to kind of help your business get off the line. But now once you've got a bit of product market fit, you're generating a bit of revenue, then you would typically start seeing yourself being in the startup or seeds kind of stage of business, where that's where early stage venture capital funds, angel investors and incubators are generally there to support you. And once you've moved through that, then you get into a growth phase where you've got a lot of traction, and now you just need to kind of double down on your growth. And typically in South Africa, that's where more development finance institutions, later stage VCs, and probably earlier stage private equity organizations are there to support you. And then post that, there's more later stage private equity funders, more commercial banks and mezzanine providers. I think this just all has to do with risk, right? So your differing level of players just have different risk appetites, and that's kind of where they participate. I don't think we should kind of dive into too much detail here, but what I've kind of just tried to extract is just some like data or resources around, okay, like who are angel investors in South Africa, who are early stage venture capital funds in South Africa, who are private equity funds or crowdfunding resources that are available for South African or African startups to kind of use to see where they can get pools of capital. I think I'm happy to share this presentation, but what's most important is there's a lot of resources available online. If you just search for South African angels, for example, there's organizations like Josie Angels or ABAN, which is African Business Angel Network, Cape Town Angels, there's Dazzle Angels, which focuses on female businesses. So highlighting here is just that once you've identified what stage of business you're in, kind of what type of party you want to get funding from, there are resources available online to kind of find out who are those parties that you can kind of reach out to. Okay, now you've understood where you are as a business in your life cycle. You understand kind of what type of funders are available for you and what type of pools of capital are available for you. And now you're about to approach a funder for capital. Just some tips or key considerations that I would suggest that you think about, and I'm sure everyone here probably has thought about this already, but it's important. Firstly, like what type of business do you have? So do you have an asset-heavy business that needs to buy assets, or do you have a tech-enabled businesses that's a platform or marketplace that doesn't need much capital? Are you operating in an agri-tech sector, or are you operating in a fintech sector? Are you operating in healthcare, for example? Why that's important is because that will help you identify the type of funder you're looking for and also the type of capital that you can raise. For example, if you're operating in healthcare or education, there are a lot of pools of capital that are available to try and improve healthcare outcomes or improve educational outcomes that you should try and tap into, versus if you're a fintech, you're probably going to need more commercial type funding if that's not a development goal, for example, within the country. I think stage of business we've talked about. What type of capital do you require? Because I think that's a very important consideration, and I didn't talk about it earlier, but there's multiple forms of capital that you can raise. You can raise grant capital, you can raise equity capital, you can raise debt capital, you can raise some sort of convertible or hybrid of the 4 or 3. And why that's important is because you need to understand who gives you those types of capital and what are they expecting in return for that type of capital. So generally, earlier stage, probably grant. Moving on to higher risk is still equity for majority of the time, and then moving into debt at a later stage once the business is cash flow positive. Then you should probably consider industry fundraising resources, which I talked about. There's a lot of ecosystem maps and fundraising templates that are available for South African businesses to utilize to make the process easier for you. So I would suggest looking at resources like Brighter Bridges or Boabab Network, all South African resources that are very relevant. If you're trying to figure out templates to raise capital, look at a resource called Digital Collective Africa, which is a collective of South African venture capitalists who are trying to build templates to make this process easier. Then you should look at what other type of support do you need. So is there non-financial support? Because cash is great, but a lot of the time you need business building skills. And that's where a lot of the ecosystem incubators, accelerators in South Africa are very helpful. Types of Founders Factory Africa, Ingenie EdTech Accelerator, Startup Bootcamp, all of these types of accelerators and incubators help you build your business. And that's something to consider. I would say you also need to understand what type of capital you need to raise and what amount and what you're willing to give up for that. And maybe an important point is just, do you know anyone in your network that can introduce you to the type of person you're trying to reach? That's always going to get you further down the line than a cold call. And probably the most important thing is, or most important 2 points is, are you investor ready? So yes, you want to raise some capital, but there is a massive process and requirement on you as a funder to be investor ready in order to raise capital. And we'll touch on a bit of details on that later. But the last point to consider, which most startups I've seen don't consider, is just, do you have the resource and capability to manage your business while you're fundraising? And do you have the timelines to do that? Because it's very unlikely you're going to say, I need to raise capital today, and you're going to raise it tomorrow. It's a lengthy process, takes a lot of time and resources. And I've seen a lot of businesses ultimately fail because fundraising in itself is a business. And if that takes you away from your core operations, it's normally has quite a negative impact on your business. Cool. So again, to just go through the journey, you know where you are as a business, you understand what type of capital you want, who you want to get capital to, you've considered all those things, and now you're about to approach someone to give you some capital. The most important thing before you approach any funder to give you capital is being investor ready. And this concept of investor readiness is basically just thinking about the funder's psyche and putting yourself in their head. So as a South African investor, and I'll speak about VC investment, there's a common misconception that we don't want to provide capital to startups. And it couldn't be anything further from the truth. I'm incentivized, my team is incentivized, VC investors are incentivized to deploy capital, to give funding to startups. And the reason for that is we've got a mandate, we need to deploy capital and we need to make returns. So it's not that we don't want to give capital, it's just we need to allocate capital the best of our beliefs in order to meet our requirements. So if you can make that process easier for any investor, that will significantly increase your ability to raise capital. And how do you do that is by being investor ready. And there's two components of being investor ready: having resources, documents available that your investor is likely to ask for. And then the second part is just like understanding what an investor is looking for and what good looks like, so you can position yourself for that. I mean, I won't go through this in too much detail, but from a documentation perspective, I have yet to see a business successfully raise decent amount of capital other than friends and family without having a solid data room. And I know as an investor, if I ask if someone comes to me and asks for capital and they send me a link of their data room with all of these documents, I'm already inclined to want to fund them just because they've done the work in being prepared. I think it kind of goes for everything in life, but for raising capital, it's very important. So, I would suggest having a data room, and what that data room should include is a very clear and comprehensive pitch deck, a forecast financial model, which has at least a forecast period of 5 to 7 years, depending on what the funder's landscape or investment horizon is. Having an organogram and your team CVs, because funders are effectively investing in a team at the earlier stages. Having all your incorporation, regulatory documents, because that's something we would have to look at. Showing your capitalization table or your shareholding structure, having some information on market sizing, providing your historic financial information and KPIs. And then from our side, from a tech perspective, definitely having your tech overview and product roadmap is something that we look for. I think everyone kind of understands it, but probably I'll spend a little bit more time on just explaining what, in our view, as Newtown Partners and being in the industry for a little while, what we kind of look for and what good looks like. Because if you can understand what good looks like, then you can prepare yourself for that and make sure you improve your chances of raising capital. So I think the most important thing, and it's kind of a pitfall as well, is sometimes founders don't explain what their business does in the most granular and simple manner. So if you approach someone like myself and you operate in logistics, for example, I have no logistics background. Now you're telling me you're running a trucking business or trucking software business. It's very hard for me to get excited about your business if I really just don't understand what the problem is right now. So, explaining how the industry currently works, what the problem is, and then showing me what your solution does is probably the first 2 minutes of any conversation we have with startups. And that kind of determines whether we're interested or not, just by that kind of one point. Other things we look for is a large and growing market opportunity, because that increases the likelihood of success. Clear and evidence go-to-market strategy. So how are you going to acquire your customers and how are you going to go about that? Important is a repeatable sales cycle, so that we can assume that you have a process to sell to B2B customers or B2C customers, and that's repeatable. That's very important in the South African context, given that the corporate sales cycle is ridiculous in itself. Probably the most important thing we look for is just a diversified and technically strong and experienced founding team. Typically, I would say if we had to make it perfect, 3 founders, one from a technical background, i.e. technology build, one from like industry experience perspective, and then one person who's kind of just the CEO and strategic visionary. We look for strong founder incentives, so like large equity holdings in the business. We look for businesses that have strong competitive advantages, which allow you to gain customers from competitors as well as retain those customers, and not based solely on pricing. We look for founders who tell us exactly what they want and what they're going to use it for. Don't come to us and we want to raise capital. Okay, great. Like, how must I help you there? I want X amount. This is what X amount is going to be used for. And that's why X amount is going to get me to the next milestone, which is relevant. Another key important factor is just understanding what are the key drivers of your business. So yes, revenue is important, but what drives revenue? what are the levers that you can change that influence your ability to gain customers, increase revenue, retain customers, increase margins, that sort of thing. I think that's important. Naturally, the ability to show strong growth on revenue, financials, and non-financial information. Another point we look for deeply is just a team who understands their weaknesses and understands the gaps in their business. So we never expect a business to be perfect, but we find it very difficult to work with a team who believe they know everything and have no gaps, because if you believe that, then you're not going to focus on improving those gaps or solving the challenges that you have in your business. And then the last 2 points is having a strong network of advisors or investors already is always going to attract capital, and that's going to make it easier because we like to invest together and de-risk things. And then the last point, which is probably also really important, is it would be great if founders just understood general fundraising terms and understood what these general terms look like, so that when you are negotiating, that it's not a founder like taking a significant period of time just trying to upskill and not understanding that these are normal things that are asked for. Cool. So now that I've kind of told you what we generally look for and how to be investor ready, maybe I'll just touch on or close off on just some common pitfalls that I've seen South African founders, international founders, African founders do when they're raising capital. Probably the first one, I know it's not the first bullet, is just having an entitled mindset. I know that might sound condescending, but sometimes we get founders who come to us and say, we deserve your money, you owe us money. And that's never a great way to approach a founder, in my experience at least. Another pitfall is approaching investors who don't invest in your sector or don't invest in the stage of business that you have. And that requires a lot of research on your side, not being investor ready, we've mentioned, not having any knowledge of typical funding terms and round sizes and expectations, I think is important. I think something that founders do often is just rely on a single funder. So have a conversation with one funder, expect them to give you money. And if anyone on this call has tried to raise money from the large government organizations in the country, will quickly realize a lot of businesses die or go out of business waiting or going through a fundraising process with these organizations. And that's because it takes 12 months, 18 months, 24 months. And by putting all your eggs in one basket, you're effectively going to put your business at risk. So I always encourage founders to speak to as many funders that are available so that you can get the best opportunity for your business. And then not using or leveraging existing support structures other than capital. So like I mentioned, ecosystem players, ecosystem builders, accelerators, government competitions, corporate startup competitions. There's a lot of capital available. Then there's a lot of support that is available for you to leverage to kind of grow your business. So at a high level, that's kind of my view on a few points that are relevant to consider when you're trying to raise funding in South Africa or Africa.